Hello, Tiger Traders. Today is Sunday, 22nd June 2025. We hope you're having a great weekend. We will make a daily analyze Eurusd on two perspectives. One will be bullish, more probability on our opinion, and one bearish, possible in case tension in Middle East persist. De-escalation reduces USD safe haven flows, boosting EUR. ECB hawkishness and stabilizing oil prices support Eurozone confidence, lifting Eurusd. Unlike JPY, which gains from oil-driven BOJ tightening per prior analysis, EUR benefits from oil price stabilization as Eurozone inflation fears ease. A Brent drop to $70 by barrel mitigates import cost pressures, supporting EUR. We must pay attention to a geopolitical catalyst. Al Jazeera's report of Iran-France talks and Reuters' mention of Geneva negotiations suggest a path to de-escalation, reducing risk-off pressure on Eurusd. How market can react: equity recovery, S&P 500 futures positive, and reduced volatility, VIX falling, favor risk-sensitive EUR, pushing Eurusd above 1.1550. The main trend still bullish. Iran will retaliate. Attacks from USA to Iran make dollar rise, but Iran retaliation attack will make dollar fall, pushing Eurusd for upside. Specific catalysts must counteract the current risk-off environment driven by the Iran-Israel-US conflict. Key conditions include de-escalation of geopolitical tensions, diplomatic progress, such as successful nuclear talks in Geneva, noted in Reuters, or a ceasefire, reduces safe haven demand for USD, weakening DXY and supporting EUR. Hawkish ECB policy signals, stronger than expected European Central Bank, ECB, rhetoric or data signaling tighter monetary policy, rate hikes, boosts EUR, especially if the Federal Reserve remains dovish. Eurozone economic resilience, positive Eurozone data, PMI or inflation, mitigates concerns about oil-driven inflation, reinforcing EUR's appeal. In terms of numbers, we expect some pressure on dollar rising, making some pressure on Eurusd. Can open today with a gap down, but any dip is one opportunity to buy as structure still bullish. So we can revisit 1.1460 or 1.1480, and after upside to fill weekly FVG 1.18 on next week's, or 120 on extension to get strong liquidity weekly level. On the other side, we can have a bearish scenario if USA escalate this geopolitical conflict. In that case, market will choose safe haven demand. The USD, as the world's primary for USD reserve currency, gains during geopolitical crises. Reuters reported a 0.5% DXY rise to 98.2 on June 13, 2025, after Israel's initial strikes on Iran, driven by safe haven flows. Today's U.S. strikes and Iran's missile retaliation amplify this, potentially pushing DXY toward 99.0100.0. In that case, market can drive to 1.1350 or 1.13 in case 1.11460 don't hold the price. On extension, in case dollar goes above 100 with consolidation, price can drive to 1.1150 or 1.1090 liquidity on extension. But this bearish scenario have less probability, because all bullish drives on Eurusd pair that can push it for more upside like we talked about before. For now, the strategy will be buy on dip with 1.18 as a potential target for next week's. For now is all. Mike Tiger and all team wish all a great Sunday continuation. Be safe and trade smart. Preserve your capital using a good risk management. Good luck for all and have a profitable next week.